Welcome to FOMO Consulting for your Xela stock analysis video on Thursday, August 19th. Ladies and gentlemen, today was a better day than you think it was. And as always, the apes are winning, the diamond hands are winning. Most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I would appreciate the support. Let's get into the video. So the broader market could not make up its mind if it wanted to be bearish or bullish today. The S&P closed up 3, Dow was down 94, another red day. Nasdaq up 15, and the Russell was down 29. Certainly a lot of indecisiveness and volatility today in the market. A lot of ebbs and flows due to the taper talks, inflation concerns, certainly COVID, Delta variant, and the effects of that short and long term. So overall, just a lot of volatility, and quite frankly, over the next week or so, I expect nothing different. So let's look at crypto. Overall, crypto is having a fine day. Doge is back up over 30 cent to 31. Bitcoin is up over 46,000. Cardano is ripping 14% today, at least at the time of this recording. Overall, everything in crypto seems to be doing quite well. So well done to the Xela German apes, down 4.83% to 1.97 euros. Overall, again, victims of the broader market. This is a really an international issue with these taper talks and the broader economy, and Xela felt the effects of that. So looking at the options chain, again, a lot of hopes around those $4 to $5 strikes, as you can see, but right now it would appear that the 250 strike is the battle line, if in fact there's a battle at all. Quite frankly, I expect it to stay below the 250 and allow those puts to expire in the money. Not sure if there'll be much of a fight on a bullish side, but certainly we'll get them next month. Yet again, you see the broader sentiment has changed really very little overall, very bullish between the 250 and the $5 strike, about 15,000 in total open interest versus 3,200 on the put side. So overall, with Xela lacking a catalyst, we're just really tied to the broader market of the Nasdaq, and we know how that's been going. So you see how Xela did today. Overall, not the worst day. It was better than you think it was. But, you know, it could have been far worse. A lot of volatility again in the Nasdaq, as you can see below. Xela really held its own and tried to find some level of consolidation around that VWAP area. Obviously, the heavy selling pressure at the end of the day and the broader market finally pulled it below it. But overall, not a bad day, to say the least. Down to $2.23. We are kind of at that heavy level of support. Hopefully we can stay there. Again, down 9 cents, 3.88%. About flat, a little up after hours, which is always good to see, some buying pressure. But overall, you know, with lack of a catalyst, if we get a rebound in the Nasdaq broader market over the coming days, we certainly should see Xela respond to that equally. 5-day, 5-minute chart. Obviously, you can see where we've fallen below down to the level of support at 225. But if you put things in perspective, this is the Nasdaq chart over the same period of time, which is why Xela has been getting drugged down. Again, we found that heavy level of support at 225 area. If we can maintain that even after all the heavy selling pressure that the broader economy has been under, we are doing quite well. Again, looking at the broader picture, 1 hour chart over the last month, again, hitting that level of support at 225 is absolutely essential, and holding it. It doesn't have to be to the penny, but we just need to maintain that level even under this heavy selling pressure attack. Again, Nasdaq chart, same period of time. You see, especially over the last 2 or 3 weeks, you see the broader market effect on Xela. It has been just downwards, getting pulled each and every day, nearly a few pumps here, a few pumps there, but overall, the overall trend has been selling pressure. Again, bigger picture, 2-hour chart over the last 3 months or so, you certainly see where Xela has found somewhat of a comfort level at that level of support of 225. It's been there before. It has bounced. Hopefully, that will be the case going forward. And the MACD on the 2-hour chart is about to make a bullish crossover. Certainly, the RSI is completely overblown on the oversold area. So I expect good things in the coming days. Looking at the options data, certainly the volume is about a third of what it has been more recently. We've been trending around 12 to 15,000 in volume a day, but even on a lighter day, the call versus put ratio is certainly very bullish at 1.5 to 1. Overall, not a lot of big contracts either, but it looks like there are some deep in time calls, $250, $4 at the September, December area, what have you. Obviously, I think the bullish sentiment is starting to look further out, obviously in time, which is a good thing. Looking at the Ortex data, currently 10.97 days is the average age of the short positions. So this keeps growing each and every day, and you wonder how long it can stay that way. If you look at that green trend line, you look before the big run up, they had been in those positions for 55 days as an average. So basically, from the time of the big run up, they held those positions until it basically got down to its lowest point, down around $1 or so, $1.25, and apparently they covered at that point when the price started to curve back up. I believe we are in a similar scenario, obviously, from the time of the big run up. Then the price recurved, they did some covering, and then when the price started coming back down again, tied to the broader market, they've stayed in those positions, and about that peak a couple of weeks ago is about the time they re-entered those short positions, it would appear. Looking at the short interest trend data, obviously the overall trend is going up, but they are returning some shares, which is altering some of the trend lines on the more recent. So what I want you to look at is the red arrow. So you see, this was yesterday's data on Fintel. Take it with a big grain of salt. There were 5 long only positions, and again, 13F filings are being processed and updated. There were 5 long only positions. Today, there are 61 long only positions in Xela. That is an incredible increase. Now, it may be small positions, large positions, what have you, but that's based on 13F filings. But overall, that's an incredibly bullish increase. Volume today was very, very low at 11 million. And again, that's tied to the broader market. Most stocks were very, very low, AMC, GME, what have you. Short shares available, 2.4 million with a bar fee of 5.46 according to Fintel. Short interest did go down just a bit to 17.49, but that is a product of returning borrowed shares. Borrowed 1.27 today, which is pretty low for Xela, and returned 1.59. Utilization came down just a little bit because of that, 83.42. Cost to borrow about 6.25%. Shares on loan did go up to 13.3 million. So overall, fundamentally, nothing overall has changed except for the institutional ownership, which I think is very, very bullish. So I would like to thank you all for watching. If you found this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I would appreciate the support. Take care now.